Bridge loans 101. What's the skinny on bridge loans? How do they work? What are they? Bridge loan, more or less, you own an existing property and you'd like to bridge. You'd like to use some of the equity in that property to bridge over towards the purchase of a new one. Traditionally, this happened. You'd qualify for the payment on the bridge loan, the payment on the new loan. One lender would give you the bridge loan on your trailing residence to use to purchase a new one. You had to use the same lender. Sometimes it came with higher rates, higher fees. You may or may not have had to make payments on the bridge portion. It may or may not have counted in your debt to income ratio. And it became this really just ugly program. And most people believe you got to make $1 million a day to qualify for a bridge loan. Nobody uses them and it doesn't work. And that may have been the bridge loan of 20 years ago or the bridge loan of your bank. However, there are a lot of different options today. So there are bridge loans today where when you're doing a bridge loan, they don't count any of the trailing payment. It just doesn't count at all. And you're only qualifying for the new payment. They're going to make the assumption that that home sells. There are programs that will allow you to do a standalone bridge. They're going to give you a loan knowing wholeheartedly that that loan is going to pay off. It's not going to last very long. And they don't actually care if you use them for the second mortgage. So you could go through, do a bridge loan and close with Rocket, UWM, whatever wholesaler you would want to use and get a bridge loan. Everybody has access to that right now today. There are bridge programs where you can take your trailing property and your new property, you add them together, and they'll give you up to 75% of the value of both properties in one loan. I've seen people be able to go in, they own a house that's, let's say, $600,000, they're downsizing, buying a new one that's $400,000, and they're able to go in and actually buy the new house with cash, get left with, $50,000 for rehab, some fixing up on the old one before they sell, and go in and do these programs together. And they may or may not even qualify from an income standpoint to carry both houses. They're looking at the collateral piece. So just understand a lot of these decisions are being made from a common sense approach, more so than the rigid guidelines of the past. And there's even programs where companies will come in, buy your existing home, will give you some money to buy a new one, and they'll even set aside some money for a rehab budget. You can almost do a fix and flip of your own home while you go out and buy a new home. So just understand there's a lot of programs. And if you don't believe that a bridge loan is an option, you may not believe it just because you're listening to the wrong people. So be aware, there's a lot more programs out there, and I'm sure that there's a ton of stuff I'm missing out on, but every day I learn something new, and I just want to share it with you. So if you've got questions about a bridge loan, you're thinking about buying a home before you sell your existing home, you got questions about that, or you're a broker or a banker that's got questions on how does this work, reach out. I'd love to help you. I can point you in the right direction with some different wholesalers, but there are a lot of really cool programs out there in the bridge space. And just because the person you're talking to today doesn't have them doesn't mean it does not exist.